Alrighty, folks, we need to have a conversation about the Fed and all the stuff going around in the economy, inflation, growth, unemployment. But I think I want to start with this notion of a shadow Fed chair being announced in the next couple of weeks. According to Scott Bessent on Bloomberg, just this morning, he said we should be nominating the next Fed chair in the next couple of weeks. Shadow Fed chair coming. What do you think, Taylor?
It was a crazy idea to have a little puppet behind Jerome Powell 6 months ago, but it was launched then, and then I guess the way of doing it is just saying, hey, we're gonna put the next guy in place and just have him articulate everything to the market that he would be doing, and know that that's what's going to happen in 6 months. So yeah. Here we go. Now we're coming right up on Fed shadow chair in place very quickly.
Yeah, it's really funny because about a month ago I said by the end of July, Trump's going to be so fed up that we're going to do it early. Now, historically speaking, just so you have context, you typically get the next Fed chair about 90 days before the term's up. If you don't know, the term's up in May. So you would normally think February or March of 2026, you would hear about it. So really you'd have 1 or 2 meetings left. It wouldn't be a big deal. But it's obviously clear that Trump is pissed off. It's obviously true that Trump wants lower rates. He's name calling Trump or Powell left, right, and center. And I called it. And it looks like it's going to happen in July as I thought. But here's my question for you. Because now if I look at the chessboard, you have a choice. Trump has a choice. You can either A, pick somebody on the Fed already, like Waller or Bowman, for example, which means every meeting between now and the end is a problem. However, if you do pick somebody on the Fed chair, they are still bound by the Fed rules and blackout periods, which means maybe you can't get your person in front of it. So I think the first chess piece you have to figure out is A, do you want to nominate somebody in the Fed already that makes every meeting a lot more uncomfortable, but you have other rules that you can't violate? Or B, do you want somebody outside the Fed that is Monday morning quarterbacking every Fed decision and probably more importantly, talking during the blackout periods? Because that could get interesting. So that's the really first decision. When you look at the calculus there, any thoughts on current Fed president or outsider?
Yeah, I think that if you look at the betting markets, that they're going to say a current Fed president. But Trump's history does not allude to that, right? He is not an academic chooser, if you will. He has historically gone to the business world and said, this person agrees with my narrative and they're going to do largely what I want them to do. And that's the person I'm going to put in there because we're going to get rate cuts quickly.
Yeah. When I look at that, when I just play it out in my head, again, I think they're going to look at this and go, yeah, we'd love to pick Waller. We love that Waller's the first guy to say that go to July. We want that. But I think they're going to look at the downside of that blackout periods as a waste. So I think they're going to want to parade somebody around, especially during the blackout periods, because you can't get any Fed president to respond.
You refute it, right?
Yeah, it's just like noise. So yeah, I think it's going to be an outsider. So then the next thing you got to pick is, do you pick somebody that's already in the administration, Bessent, or I forget the other guy's name. It just escaped me. Hassett, I think. Or Kevin Hassett. So do you pick somebody that already has a seat and likely already doing a good job? Or do you pick, another, buddy or business maker who, again, is going to be essentially a voice for you? So do you have any thought on that?
Bessent isn't an improbable suitor for this role.
I agree, but could you really lose him from the Treasury? I mean, he's doing such a good job.
Yeah. And I don't disagree, but I think that he is one that knows markets more than 99.9. And maybe there's someone else that you can find out there better that's willing to step up and, step away from a current role potentially, which is a big underlying piece of it. Otherwise, you have to find someone that's hung them up recently and bring them back. And maybe they're in retirement and they don't want to do that. So Bessent's the easiest choice. Then you got to figure that out. And that creates a quandary on that side. So I don't know. Trump's a wild card. Like, let's call a spade here. You don't know exactly what he's going to do. Bessent is a likely option, I think.
Well, again, if we play this out with Bessent, again, I think Bessent would be an amazing Fed chair just with what he's done. And again, it's really interesting because, again, if you nominate Bessent, he doesn't even get the job till May. Right. So again, maybe not May, because again, I think one of the outcomes of this we'll get to in a minute is Powell just resigns early. So we'll leave that on the table for a minute. But if you give it to Bessent and you say, okay, it's your job in May, that basically gives him call it 10 months to finish all the trade negotiations, which probably means, again, you get the big ones done. And maybe there's a couple of little hanger-ons at the end. But probably the big part of his job is done as I think about this. And again, I think at this point, both Bessent and Trump have said that they want not only oil down, but rates down. So the more I think about it, maybe Bessent is the right option because, again, you can parade him around everywhere. He's already doing a great job. His main target of, negotiations should be done by May.
Right.
Maybe that makes sense.
Yeah, I think it does. We'll see how it plays out. I will take the over on Jerome's ability to stay where he is through May. I think he takes very seriously, at least, and this is just playing psychologist, which I have no expertise in. Let me be very, very but I do see what he says as being very staunch in his take on this is his constitutional code of ethics is what's pinning him to doing only what he thinks is the right thing to do. And I think the more and more and more you try to bully him, I think the more he hunkers in on this fact that we are an independent entity. We raised our right hand in an oath to say we were going to fulfill our duties in this action. And I think that the more Trump berates him, the further and further, kind of drawn into this he's going to be.
No, I think there's no question. Again, I think the chances of Powell resigning are less than 20%, probably less than 10. Because I do think he's, at this point for him, it's reputation. He's already got enough money to do whatever the hell he wants. His next generation's already got enough money to do whatever the hell they want. So for him, it's reputation based. Right now, he's called the Fed president who raised or cut too late. Transitory. He's still stuck to his name. I think he wants to go down as the Fed president who maintained independence. And if he resigned early, he might give that up.
I think that he thinks that he's done a pretty darn good job.
I would agree.
I think when you look at the scorecard, the numbers kind of allude to that. Now, granted, he was late on the brakes and to raise rates back in 2022, but we've seen that interest rates don't really have a material impact on inflation, I think is what the data is telling us. And you look at inflation back in 2022, that was not a U.S.-centric thing. Mm-hmm. That was a global thing. So to pin that on him, and I know, listen, we all like a scapegoat. Whose fault was inflation? And he's taken a lot of it, and Trump is giving it to him, right? Even more so than giving it to Joe Biden, right? I think that Trump would make the case that it was Powell's fault. Not mentioning that monetary policy, fiscal policy was just dumping money into the market as well. But yeah, he was too late. There's no doubt about it. And hindsight's 2020. There were a couple things at the time that I was screaming about. Why are you buying mortgage-backed securities?
Yeah,
with
forever.
The housing market just going bananas, and you're just pinning mortgage rates lower and lower and lower by buying these mortgage-backed securities. And that was a silly one. But at the end of the day, I think that Powell thinks he's done a good job. And I actually would beg to make that argument myself. And I don't think he's backing out early.
No, I don't think he's backing out early. Yeah. But again, he could. I mean, you could have one of those days where we've all had them where you're just like sick of your boss and you're like, screw it. I'm out, bud. Peace. We all want to do that someday. But yeah.
Oh my God. Can you imagine what would happen to the markets if that happened? Whoa.
The bond vigilantes would go bonkers.
Oh, absolutely bananas.
Yeah, because I think that's one of the things that a lot of people don't realize is, even if Trump gets his way and gets his person, there's no guarantee the long end comes down. I mean, you don't have to look back very far. The Fed cut 100 basis points and rates went up 100, right? These people still think there's a 1-to-1 ratio. So it's no guarantee.
The sheer function of cutting rates, if all things are being equal, if the level playing field and you have interest rates here versus here and nothing else changes, it will naturally drive interest rates higher on mortgages. That's what will happen. That's how things function. It makes more money enter into the system. More money in the system means more inflationary pressures, means more economic growth, means higher mortgage rates on a higher tenure. That's how the math works. And then not even math. That's just the logic and fundamentals of how the market moves.
Yeah. Well, the other thing to think about being late, again, because I think we all agree, even Powell would agree they were late to start raising rates. I don't think that's a shock to anyone. But when you step back and look at other countries, a lot of other countries have been cutting for quite a while. I think the ECB is like their 11th cut or 9th cut or something crazy. Switzerland's below 1%. There's a lot of countries cutting, and we haven't.
Yeah, I think our economy has been a little bit more resilient. The technology space is just massively larger here than what it is over there, which creates a more resilient economic backdrop, which gives you less reason to cut.
Yeah. So let's kind of wrap this up. So what do you think? What do you think the chances are we get a nomination by the end of July? Just a nomination first.
Yeah, I think it's high. I think it's like a 75% chance that happens by the end of July.
All right. So then step 2 for me, do you think that person's going to be in or outside of the Fed today?
Outside the Fed. I think it's likely Bessent.
All right. And then the last one is Bessent. So I think that ticks and ties. I think that makes a lot of sense. Again, when coming to this conversation, I wasn't really cool on losing Bessent, but when you add in that time variable, which I didn't think about, of May, he could be done with the important stuff and roll right into another key role. So could happen.
Well, how independent is the Fed?
I guess we're about to find out.
And if you take someone from the Trump administration and move them into the Fed position, like, it's not going to be independent at all. And it's already trying to not be independent, at least from DC side. Powell's trying to remain independent, but yeah. So those lines will get a real blurry real quick.
Well, so let's ask this. So the bond vigilantes over the last 60 days have already kind of shaken the market 2 or 3 times, depending on how you look at it. So do you think, so again, let's just pretend for a moment that it's both our call that Scott Bessent gets announced as the next Fed chair, which takes over in May of 2026. Do you think the bond vigilantes look at that going not good and rates go long end goes higher?
I think what you're going to have to see is how much Scott Bessent is a peddler of Trump's policy or how independent he wants to be. So right out of the gates, I think the market takes that as interest rates are going to be cut, back end of the yield curve goes higher. But I think what's going to become clear relatively quickly is if he is the person, and anybody that's the person, Trump is going to try to put someone there that's going to do his
bidding. Yeah.
Right. Exactly. So he's going to try to play puppet there. It's just how seriously do they take this Fed independence? And you'll get a better view as to, okay, are they data dependent? And that is all that the Fed is right now. Or are they a little bit more forward looking, which you and I would beg the argument, seemingly, I think you're on my side, that the Fed can start cutting sooner than what they're saying they're going to start cutting.
Yeah, I think a September cut, again, makes a lot of sense to me potentially. A July cut just seems way too early at this point.
But if the rhetoric was different between the last few meetings and today, I think I believe, I'm not trying to put words in your mouth, that the underlying fundamental pinnings of the market are proving out to be more, hey, we should cut.
Yeah,
that's my take.
I think there's a lot of growth scares out there. The job market is showing signs of stress. I just look at the math, and I think inflation is going to print higher the next couple of months. And unless the job market's really breaking, which I don't think it will, you can't cut when inflation goes. Yeah.
Yep.
All right, Taylor, where can people find you?
Yeah, find us at Life Goal Investments. We're on Instagram. We're on TikTok doing daily videos.
Thank you, buddy. I appreciate you. Have a good week.
Thanks so much.